Hey traders, just wanted to go over a trade of SNDK, NASDAQ stock, SanDisk Corporation, and go over my thoughts and my analysis and why I took this trade and some fundamental things about how prices move in the market. And let's just go over a quick overview of what was going on before I actually took the trade, and then we'll go into it in more details. Here we have a pivot that made a new high that created an area of support notated by these two green lines. We had another pivot that made a new high and is notated by this area of support with this green line. Now at this area, it's a 25-minute resistance area. Prices pulled back from this area to an area of support and rallied, created a double top, and then pulled all the way back to this area of support. There wasn't enough buyers here to hold prices up, and we moved down to the next reference point. Now prices, as you know, move from reference point to reference point. Then we'll have a price action at these areas right here, and right here, and then we'll get a signal to determine if this price action meets our plan and our guidelines in order to take a high probability, low risk trade. Now as you can see, I have a notation here that says potential sell setup area at this area of supply and demand. Now I'm looking to go short in this area, so I was hoping the prices could come to this area of supply and demand and give me a signal so we can move back down lower, because due to this price action, prices look very bearish at the time, moving from an area of resistance. However, even if I'm looking to take a trade short, what I will do is, in my mind, I will go long and be in this trade mentally so I have a pulse on the movement of the market. Now, if I was inside this trade after the signal bar and I got in this trade and I got this top and tail bar, then I got this green bar here, then the third bar, after almost 15 minutes of being in this trade, it could not move higher. I'd be very worried, especially after this topping tail bar that occurred right here. And as you can see, these bars moved up with very low volume. Now once prices moved lower with this dynamic bar showing money moved in the market, I didn't immediately take this trade because still in this area there were buyers and demand was created. Now once I got this alternate signal right here that is notated alternate signal, this gave me excitement. Now I'm looking for an opportunity to get into this trade and take it lower to the next reference point. You see notated here I have 5,000 buyers, 2,000 buyers, 10,000 buyers. The reason I have that notated is just a quick refresher on how the market is moving, where prices move up and down due to an imbalance of supply and demand. Now when you see 5,000 buyers notated here, the reason prices were able to move higher at each price increment, there may have been only 2,000 sellers, just not enough to propel prices any lower. We all know that in order for any transaction to transpire, there has to be a buyer and seller, but because of the imbalance where there are more buyers than sellers, it causes prices to continue to move higher until there is a balance and there is an equilibrium, and it allows for prices to move lower or higher again. So this is the reason why, let's say that 5,000 buyers are here, but then the next time when prices pull back to support, why you always hear the reference that there's always buyers and sellers at resistance and support, but you never know how much are actually there. This time when we pulled back to support, there might have only been 2,000 buyers, but 10,000 sellers waiting and eagerly waiting to get into the market. And this imbalance causes prices to move lower until we found an equilibrium, which you've noticed in this area here. So let's pause the video, move to the 25-minute chart, and just take a quick peek on what the higher time frame was looking like, so we can analyze it. Here's the 25-minute chart. As we were discussing on the 5-minute chart, here's the area of resistance, prices pulling back from this area. And as we talked about, prices move from reference point to reference point. So as we get to this area of supply and demand, prices tried to move higher and failed. We moved down to this next reference point, prices tried to move higher and failed. Then we moved to the next area of supply and demand. This was created by two static bars, which is a higher probability that it may not hold prices, and we will move to the next reference point where there are two dynamic bars where I give more weight of supply and demand at this area, and the odds favor that we could move back down to this area. Now, can prices come to this area and pivot and move higher, make new highs? Absolutely. The market can do whatever it chooses to do. All we can do is flow with it, just like a river. You just do, if you let it do what it does and you allow it to come to you and you don't try to force your will on the market, you will be more profitable this way. Now, these are just some basic concepts that I wanted to share with everyone. If you have any questions, you have my email address below. I'm more than happy to answer any. And remember, only you can find the discipline within. Alright, so I've taken a short setup here on this failed attempt here on SNDK. Let's see how it works here. Let's go ahead and start analyzing and watching. And let's see what we have in the market. Buyers are getting trapped. Alright, so our trade's working in our direction. Let me adjust this here so I can take some pieces out of the trade and not just all for one for all, like so we can, you know, manage the trade effectively. But this was really a scalp play, so, you know, not expecting too much out of it. Let's see here. We're going to probably take our first half here in a minute. Because it's falling, prices are falling pretty rapidly. We're going to, you know, we haven't taken. This trade station is getting on my nerves. I'm trying to move my target a little bit to adjust it. And it just doesn't even let me move it. Let me see, is this a... I'm not able to adjust the pricing the way I would. And I haven't had a chance to call them because I'm still been working all morning, and good setups have just been constantly materializing. So it's been pretty tough to get around to fixing that, like it's, you know, but I'm trying to do the best I can. 47. Alright, so we're just trailing it out right now. We've achieved our target, and that's what we do when we achieve our target. We just ride it out and just let the market fall. At where our target should be right around at, let's go for the half number. That's going to be the next area of support, price support, not actual support. Well, yes, all the 25-minute, yes, also that's the next area of supply and demand. So we're just going to ride it out.
hopefully we can get there. And normally, yeah, you can take, I do suggest you take half in positions, but sometimes if you're falling in a void, 64, there's no sense. Just ride it out and just take the full position and just leave your options open to take half when you get to your target area. It looks like the parties might be over. We'll see what happens here. Yeah.
Order filled.
Oops. Did we take our whole position? Yes, we did. Well, that's a good trade. We got 5 R's, or 30 cents. Yeah, 5 R's on the trade. Not bad.